Coinbase stock will benefit massively from the impending collapse of Alameda Research and FTX, alongside with the insane scrutiny that Binance, the world's largest crypto exchange, is currently facing. It's been well known that Coinbase is going to be one of the big losers of the crypto market because they're the only publicly traded crypto broker and exchange in the US. And because of that, obviously, crypto profits have collapsed and Coinbase's stock is down almost 70% year to date, resulting in a lot of investors fleeing for their money and completely losing all faith in the crypto giant. But if you are a long-term believer in the application of cryptocurrency, then right now could be the best time to buy Coinbase stock if you want to use the stock market as an exposure metric to the world of crypto. And this current collapse of FTX is only shedding light on the benefits and advantages that Coinbase as a platform has, which is exactly what I'm going to cover in this video. But as usual guys, before we get into it, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. So to start things off, let's try to understand why FTX is in the situation they're in right now, where they're potentially facing bankruptcy because they cannot cover all the funds that are being withdrawn from their platform. It turns out that a lot of FTX's balance sheet was dependent on their token FTT, where they potentially lent out customer assets to institutions trying to gain an interest from them, hence boosting their internal profits. And well, what happens when a self-created token like FTT is used to back customer deposits? Well, you're forced to liquidate all of it to pay back your customers who are trying to withdraw money from their platform all at the same time. This is literally a textbook definition of a bank run in the crypto market. Essentially, FTX did not have enough reserves to cover their customer assets because they were either leveraging it or lending it out to external institutions to gain more exposure. And guess what? Just like the Terra Luna collapse, it comes down to the expense of their own customers. We've just learned that after doing a lot of due diligence on FTX's financials, Binance has indeed backed out of their rescue plan of buying out the FTX exchange, which they said would be a really bad thing if they collapsed. And when the due diligence takes less than 24 hours to materialize, it's a sign that likely FTX's balance sheet was much worse than Binance had initially expected. And obviously this raises two questions for most investors. Is this crypto bear market going to continue to go down even more? And are more exchanges at the risk of defaulting like FTX? And this right here is where an investment opportunity in Coinbase becomes really apparent. You see, as a publicly traded company, Coinbase has been at the very forefront of all the criticism that this business has been facing in the cryptocurrency era and the insane bear market for Bitcoin. And if you pair that with the fact that they're still ironing out a lot of bugs on their app, which results in sometimes their app crashing, it's causing a lot of investors to completely rush out of Coinbase and think that it is also at the verge of a collapse, just like Voyager, Celsius, and now FTX. But that is exactly where you need to draw the line, because Coinbase is far superior from a financial and a regulatory perspective than all of these brokers who just went under. You see, first of all, Coinbase is registered in the US. All these other brokers that just went under were registered outside of the US, which means that they were not audited by US investors, and they also were not able to go public, unlike Coinbase, meaning their financials were completely hidden inside. And there's a couple of really important things that a company that's registered in the US can do. Not only are they able to follow a lot more stricter regulations when it comes to holding customer assets that are developed by US regulators, but they're also at the forefront of the impending regulation for crypto, where the SEC is reviewing a spot ETF for Bitcoin and also more regulation on how Bitcoin and tokens can be used for actual monetary transaction. And as a matter of fact, this idea that Binance is the top cryptocurrency exchange by a mile in the world, simply because their average trading volume is much higher than Coinbase, is very misleading when it comes to this perspective, because Binance is actually not registered in the US. Instead, they have a separate entity called Binance.US, which only trades in the US. And as you can see, their volume is less than 20% of that of Coinbase, which operates globally. And guess what? That was a very similar case with FTX, where they had to have a separate branch called FTX US to operate in America. And as you can see, their volume is less than 10% of that of their global division, which means, again, they could not be at the forefront of regulation, which is what most whales and institutional investors want to actually see. And what does this mean for you? Well, it means your money is likely a lot more secure because there's more insurance and SBIC incentives that could be introduced for investors that buy on Coinbase. Every other broker in the stock market like Robinhood, M1 Finance, or even TD Ameritrade are backed by what's called SIPC insurance. And this right here is exactly what's causing people to lose money on Voyager and FTX if they go bankrupt. They simply have no SIPC protection, which is what most businesses and brokers in the US have to protect investors. And this regulation is exactly what Coinbase is working really closely with the SEC for, so that investor sentiment and confidence can be restored in the crypto market. And what's more, Coinbase is a public company and their financials are always constantly audited by US investors, meaning they're much more scrutinized when it comes to not lending out their customer assets to external investors or not adding a token that can be used to print fake money and pump up their own balance sheet. And obviously that's the core reason why FTX has just gone under. Not only does Coinbase have an ownership structure, but they're also fully regulated and have a clear distinction between customer assets and their own personal assets on their balance sheet. Coinbase right now has around $5 billion in liquid cash, whereas they have around $95 billion in customer crypto assets. And although all of them are considered current assets, meaning they are liquidable within the next 12 months, they have consistently specified exactly how much of a difference there is in there. There's a very clear difference in what is customer assets and what is on their own balance sheet. And because Coinbase does not have their own token like Binance or FTX does, there is no way that they can invest their customer assets and leverage their own balance sheet as a result of that. Because of that, Coinbase is forced to hold their customer assets one-to-one, and they have no institutional lending activity because guess what? Institutions actually use Coinbase's platform themselves for trading and analysis. And even though they're not in the best financial position that they've been in for the past 24 months, they still have around $5.6 billion in total USD related resources, which they can obviously liquidate if they either need to give back customer funds or something major happens in the crypto market where they have to suddenly pay their debts. And another big reason why Coinbase has a very high likelihood of weathering this current crypto storm is because they've been around crypto storms for the past 5 cycles. You see, Coinbase was founded back in 2012, whereas Binance was founded in 2017 and FTX in 2019. And that's a big reason why those latter companies experienced higher growth than Coinbase, but also ended up facing their own ramifications because of that unsustainable growth. At one point, FTX was worth north of $32 billion earlier this year, which is obviously ridiculous considering Coinbase stock was worth around $10 billion on the public markets at that time, while having 2 to 3x the average trading volume and significantly more revenue streams. And when you have such high growth from revenues of around $20 million in 2019 to $500 million in 2021, at some point the bubble is going to pop. Now, it's unclear if it's going to happen again with Binance because Binance is significantly more well established than FTX. But again, Binance was also a newer startup in this area at one point back in 2017. And as a matter of fact, they were founded at the peak of that crypto cycle. And for Coinbase's 10 years of existence, they've almost been through 5 different crypto cycles, all of which through they ended up surviving despite having a worse liquidity position back then than today. And yeah, even though in the short term the financials for Coinbase are terrible and the stock is probably going to continue going down and sideways for the next 12 months, as an investor for the long term, this is exactly what I want to see. Because Coinbase's nearest competitor in FTX and Binance are now under scrutiny. And with Coinbase being the #1 player in the US, which is by far the most innovative crypto market space in the entire world, I know exactly which eggs I'm going to bet on for the next crypto bull market. But obviously guys, that is just my opinion and anything can happen in the market, so let me know your thoughts down in the comment section below.